So a bubble is basically a phenomenon in which the
Mm-hmm.
price of an asset
Mm-hmm.
rises significantly
Mm-hmm.
above its intrinsic or fundamental value.
If you were to take most, say, accountants or people like economists, they typically are taught to value a business a certain way. They say, okay, the business is worth $1 million, but the price it's trading up to 50 million.
I remember buying at $1 and it went to $2 and it went to $3. I'm pretty sure I sold at $4 or $3.99. Any stock, if you close your eye and just throw money at a stock, you could have made money because everything was going up at that time. Instead of .com, nowadays you're seeing .ai.
I guess I just view it differently now. If there's a point where everybody, that almost to me is a sign that, hey, I should start selling.
Definitely think we were in a bubble at that time. Are we in a bubble, or have you ever been in a bubble? What was that like?
Hi guys, my name is Matthew Preston and welcome to the Limitless Podcast. Joining me as always is your co-host, Thaon Simms. Hail out the people, Thaon.
Hey guys, what's good?
And today we're going to be talking about something a bit controversial. We're going to be talking about bubbles. What is a bubble? What are the signs of a bubble? And Thaon, are we in a bubble now?
Definitely, bro. I sold all my stocks, fully cashed out. You don't know.
Yeah.
But in
Trying to
reality,
time the
I guess we'll
bubble.
talk about it. Yeah,
Trying to time the
we can
market.
time a bubble. Well, let's see. We have a lot to discuss. I think, though, for starters, we can probably just define what a bubble is. But before we do that, guys, we'd love if you just leave a like on this video, subscribe if you are new to this podcast. And yeah, without further ado, let's jump right in. So, Preston mentioned bubbles, and we're gonna like define what a bubble is, right? So, a bubble is basically a phenomenon. It's like a market phenomenon in which the price of an asset, assets are like stocks, real estate, other investments, those kind of things. It rises. So the prices of those assets rises significantly above its intrinsic or fundamental value, or what people think the value what the value some people would say should be. And it's driven largely by demand, speculative demand, or exuberantly speculative demand, I would say, rather than underlying economic factors or what's intrinsic to that asset or that business or so on. So let me give you an example. Sounds all superfluous, but
what?
it sounds complex. But let's say, I don't know, Preston, you've ever jumped in a stock? This is a very weird one, just stay with me. But you ever jumped in a stock because everybody was buying it? You remember Fesco back in 2020, I think it was 2, when Russia invaded Ukraine and so on, and Fesco's price was flying. I remember it listed at 80 cents. I remember it was $2, then it went to $4, then $6, then peaked at like $8 and so on, and then fell right down. But did anything really change with the company at that time? No, I mean, they were opening up, I think, one new gas station. But so some people, if you're in the industry, brokers, investment bankers or so on, they'll analyze the company and be like, okay, this is the intrinsic value of the company. It's worth $3. Like, they think it should be worth $3. But the market, me and you, other investors, they're driving the price all the way up to like $8 and so on. So you can start to think of bubbles like that, where there's that mismatch between the intrinsic value and the market value, which is what it's being bought and sold for.
Because for me, how I kind of saw it was that, okay, if you think about whatever price of a stock or a company, right? There are different ways to value it. So I could look at the business and say, oh, it's making this amount of money and there's this room for expansion. I could say, oh, it's worth $1 million US. And I'd say, hey, if you're willing to sell me the business at $1 million US, I'd buy it. But then you might look at it and say, no, that's not worth $1 million US. That's worth 500,000 US. And so if someone came to you and said, I'd want to sell it at $1 million, you'd definitely say no. You'd be like, that don't make sense. So everybody's valuation metric or the way they view things is going to be different. So for example, you can have certain, I guess, like emotional biases, history, like if you work as a doctor, maybe, or as a medical person, maybe if a medical company were to come up, you might say, hey, it's almost like you'll have some amount of bias, or you could have some amount of bias, for example. And so the price that you may come up with is different. And so when you have the fact that so many different people have different ways to like assess a company, right? Or to value any price of anything, a car, could be a guitar, anything, you're always going to have those, I guess, different valuation. Like someone will say, oh, it's worth this. Someone will say it's worth this. And yeah. So what I was saying was that related to a bubble, I hope I didn't lose anyone. With a bubble, it's like if you were to take most, say, accountants or people like economists, they did like a finance degree at university. They did finance in high school. They have that experience. They typically are taught to value a business a certain way. So they will say, okay, give an example. The business, say, I think we've been using ticker juice for a while. Say I have a bag juice company, and last year it made $1 million in profit. And Thaon comes to me, he's like, hey, he wants to buy my company. And he comes to me and he says he'll buy it for $1 million. But I'm like, I don't like that price because last year it made $1 million in profit. And what if, and I see some growth and I'm like, hey, I'm about to sign this new contract with this school, or I'm going to start exporting bag juice. So ticker juice will be all over the place. Like if I see the growth and I'm like, hey, next year I think I could be doing 2 million in profit or 3 million in profit. So why would I sell you $1 million now? Because that'd be like, if I own all of the business, that'd be like me giving up. Like that, I wouldn't see that as a good deal. But the uncle come to me and say, hey, I'm going to buy it at 10 times the amount of profit it made. So he buys it at 10 million. And I say, okay, that sounds better because maybe, it doesn't grow as well or whatever. And I'd prefer to have that money now.
How
So
are you valuing it?
So that would be
what's that called?
you could say the price of the business, which I said was what, 10 million,
10 mil
to the profit or how much profit it made or the earnings of the business. So because you're comparing the price of the business to the profit, you can say price to earnings ratio. So that'd be 10. If it was 10 times the amount of money that the company made in the last year. So it made $1 million in profit times 10. I'm buying it for 10 million, or you are buying it for 10 million. But the point was,
so that's PE.
yeah. So the point was, if those financial people who have the standard background in finance, the finance degrees, if they are taught to value a business a certain way, or to just value things a certain way, whatever value it is, in regards to the definition of a bubble, it's almost like when whatever thing that you're looking at trades at a higher price than that typical standard method, which involves things like what I described, where you compare the profits, the amount of profit the business is making to the price you're going to buy, or the price you're going to buy it for. It's like, if there's a point where, as I said, let's call them the finance gurus, they value the business. They say, okay, the business is worth $1 million, but in the market price, it's trading up to 50 million or something like that. They'd be like, what? It's 50 times that? That doesn't make sense. And then they'd analyze the business and they'd say, hey, it's not even like the business is growing that much. It's not like, oh, they're expanding into some other country or they're about to, it's not, that doesn't really make sense. So they would look at that and say, hey, that's a bubble. So I guess that's one of the things that I guess stood out for me. It was almost like, okay, what is your definition of saying fundamental value? I think it was more from the accounting or the finance guru, the view. and then it's just okay, it's trading or it's being bought and sold at a much higher price than a lot of those people would value the company. So it's not, once again, it's not the market, because remember, the market is everyone else. So it's like, okay, there's the finance people, and then there's everyone else, the normies.
Yeah.
But yeah, those finance people, and then everyone else, right? If if they're taught to value a business a different way, and then versus everyone else who have their other ways, they would just say, hey, I bought this product, I really like it, just go buy the stock. They don't look at what the price is. They don't look at, they're just saying, yo, I like this company, I'll just buy it. I don't know what you thought about that.
Oh, no, 100%, bro. I would also state that, so sometimes, like, I think a lot of the things that drive a bubble formation is, more like on the lines of like optimism. So when people really and truly believe, because I mean, that's what sets the stock prices. It's the belief in the stock and so on. So if we have that level of optimism, speculation, even things like
even speculation. What is speculation?
What is speculation? I was so the first thing I said was more I try to remember the words I used. It was speculative demand, but it was exuberant speculative demand. So that's when, it's, I don't want to necessarily say maybe irrationally bullish on certain things. So you normally see a bubble form because of that. Or even things like the fear of missing out, right? What we call FOMO, where and I think a lot of investors have experienced it, where the stock prices are going up, up, and people are like, "Yo, I think it could go up a little bit further still, Let me buy it right here." So because you fear that you're missing out on more gains because you're literally seeing the gains right in front of you, and it's literally within your grasp. Like you can just buy the stock. But at some point, the prices become unsustainable. And I think the real thing with the bubble is, as you say, it's relative to the asset's fundamental worth. So the same fundamental things we're talking about, or intrinsic value or so on. And it's often, the price goes up without regard to traditional metrics, like what we spoke about, like earnings. You're talking about how is the company earning money, what's their profitability, or cash flow of the company. Are they generating enough cash year on year? Those kind of things are what people use to value a business, like, the same industry people, the accountants, etc. So yeah, that's the difference. But I think a crucial thing with bubbles, though, is a time component. Meaning, so I was reading a book called The Psychology of Money. I've mentioned it on the podcast before.
Good book.
Yeah, really, really good. Really,
Did you
really
buy a
good
hard
book.
copy?
Would I? Of course. You see the thing, I want a bookshelf one day, like when I get my own place and so on, and the government provides me with a house. Then I'm definitely buying a bookshelf. And there's certain books I have to have on my bookshelf. And The Psychology of Money is definitely one. I think it's a really good book for anyone that's just starting out in, or wanting to learn about investing, and how money just works, right? And how people view like certain investments and money and those kind of stuff. But there's a chapter in it that speaks to bubbles. It talks about bubbles, and I like that chapter. And I'm gonna just read just one paragraph. So part of why bubbles are hard to learn from is that they are not like cancer. And I thought this was cool because we're doctors. But he says part of why bubbles are hard to learn from is that they're not like cancer, where a biopsy gives us a clear warning and diagnosis. They are closer to the rise and fall of a political party, where the outcome is known in hindsight, but the cause and blame are never agreed upon. So it's hard for people to tell whether they're in a bubble or not. Like it's hard to say, all right, definitively, yeah, we're in a bubble. Like, oh, are we in people? You'll hear people talk about an AI bubble, or a housing bubble and so on. And we'll talk about more of those
Mm-hmm.
later.
Mm-hmm.
But it's hard to do that now. Easier to do it in retrospect because,
Mm-hmm.
yeah.
Mm-hmm. I thought he was even saying that in retrospect it's still hard because it's not something that there is a like a consensus, like a view. Oh, it's this definite thing. It's just like it's basically multiple factors.
Mm-hmm.
Yeah. It's
Yeah.
very hard to pinpoint that. Yeah. But I think even one of the things that I think he highlighted too was this whole thing of this time is different. So it's like, okay, a bubble happens. So it's not like, like a bubble happens and then, many years later, a bubble maybe happens. It could be in the same place in the world or like a different part of the world. But there's usually some amount of truth to it. So it's not like people usually get very excited about something that has nothing interesting or no value in it. There usually is some amount of value there. It's just it becomes, I guess, excessive.
Yeah.
Like so there is actually value there, which is a problem because it's like, hey, there was a point where someone, just like you talk about other bubbles, like there's probably a point where other people were like, hey, this actually makes sense, and they were doing well, and then it just hit, I guess, bubble territory.
Yeah. One thing in the book he says though, and I'm going back to the point on time is there's an idea in finance that exists right now that seems innocent but has done what incalculable damage. And it's the notion that assets have one rational price in a world where investors have different goals and different time horizons. So you know how an IPO will come out and you see these different brokerage houses post different prices and so on. What's the actual price? Like what's the intrinsic value, right? And then to me, if I'm looking on a stock, let me give you an example. So how much should you pay right now would you pay right now for Trans Jamaica Highway, just for argument's sake?
What price is it at now? As in by the whole company? I would
No,
probably do.
not okay, fine, the whole company. But I'm not talking like, how much would you pay at what price? Make it easier for everybody.
Oh,
How
so
high in terms of price would you go per share
I buy it
if
at
you were to buy Trans?
$3.
You'd buy all of Transjam at $3.
Yeah. Skate
Now,
on the
if I
toll.
ask, fair, yeah, skate on the toll and thing, yeah.
My toll now, boy.
And good dividends. So hey, I get you. But I think the answer now depends on who you are, because I asked you, Matthew Preston. Suppose I was asking somebody else that had a 30-year time horizon. Do we still think the toll would be worth $3? I mean, if you have that 30-year time horizon and that's your plan to exit, would you buy it up to $4 then? Would you buy it up to $5 if you see Transjam selling for $30 in the next 30 years? Suppose Transjam actually hits $30 in they do their buyback, they do some certain buybacks, they split the stock and all of that. They have more highways all over the place. If your time horizon's different, then the smart price to pay it involves a more sober analysis of the company and so on, and what your goals are and all of that. So that's the one thing that I think bubbles, that's the reason for bubbles, I would say. You have different investors looking on the whatever asset it is, I'm going to talk stocks, with a different view and with different mindsets and with different timelines. And so I think that's critical, because are you looking to sell within a year? Then you pay attention to current, traffic, I guess, current traffic statistics and current toll rates and so on. And then you're starting to think, will we be in a bear market or so on? But if your time horizon is 30 years, what did the prospectus say about increasing toll rates over the next 30 years, about them expanding, all of those things? So it's a bit different. And so when investors have different goals and time horizons, and they do this in every class, every asset class, this isn't just stocks, this is real estate, everything. Prices that look ridiculous to one person can actually make sense to somebody else, because the factors those investors pay attention to, like if I pay attention to certain things, somebody else is paying attention to something else. And so I want to give an example. Let's talk about the dot-com bubble. You remember the dot-com bubble? Really?
Yeah,
You were
well, I
alive, bro?
wasn't. Yeah,
We were alive still. Probably
yeah,
just barely.
yeah. I didn't know
Um
what was going on though. It's more just now, I guess, reading that I'm like, oh wow, that
mhm.
was happening. Like I'm wondering what I
Yeah.
was doing then. I was just like,
Bro,
just living my life.
we were young. We were extremely young. We were babies at that
Yeah,
time.
yeah.
So
Don't say the age though.
yeah, we're not at the age. Definitely not. We're more than babies, but yeah. But at that time, so my understanding of the dot-com bubble was
Uh-huh.
and this happened in the late 1990s, where you had the internet. It was the age of the internet. Internet startups became the thing on Wall Street. Investors started to pour money into anything with a .com in its name. And at that time, so that's often ignoring traditional fundamentals that we talk about in
From the
favor of the
finance, from
hype.
the
And
person of like a finance, the traditional
yeah,
finance
bro,
valuation. Yeah.
because we're dunce, right? We don't need the finance people. From it said .com, this I go make money.
Yeah, you know that apparently there were companies that it's like say the business was running a certain way and they were listed. So they were like it was a public company, so people could buy and sell ownership in the business or stocks. It's like apparently some of the companies would just change their name to .com or just
Yeah,
put .com in their name. So they didn't even actually necessarily set up a website. It was just let's just put .com or set up a basic website. Let's not have any like actual plans or things like that. Let's just do that and the stock would shoot up. There were times where it would
yeah,
shoot up percentages like 100%, 50%, and I'm just like, wow. Like
crazy.
it's look now and you're like, oh, how could that happen? But when if you were there, they were like, bro, they're gonna .com, like you're like, oh yes, like they're gonna be the future, man. It's the website, like
Yeah, that's the
it's the
future, and
I mean,
everybody is
look at
getting
it
like
now.
computers.
Think of it now. Look at now. Internet is the like. Think about that. The internet. We're recording this on the internet. People are watching this. You, the viewer, who is going to subscribe right now, you are watching that video on YouTube. That's through the internet. The internet did change the world, but because once again we said there's always usually something apparently there, or just get much more excited. It's like, hey, that was whatever years ago. It was, I guess, you're forward pricing or just thinking more about the future than. And then certain things just when, life challenges will happen. So yes, it reached there, but it's like, it just ran so far ahead,
Yeah,
And I was just even looking at
yeah,
like, there were people who made lots of money off of it too. Like people lost lots of money. Once again,
millions.
people were able to make money. For example, apparently things like Amazon was one of those that apparently tumbled back then. And then look where Amazon is
Oh
now.
yes,
So
that's
people were
true.
like, you realize there are people, while people were selling, there were people who were buying though. And they were like, hey, Amazon, I'm still seeing that vision, even though it's down 90%, 80% or whatever. And they were still seeing that vision. And maybe they still, I mean, they probably would have sold their shares by now, but maybe they still have their shares,
Maybe, and they're worth way more than back then. There was a company, I don't know if you heard of pets.com,
Yeah, I heard
but
of that.
yeah, pets, the long and short of it is they raised millions of dollars, and they had no profits. And that was just driven by the belief that the internet growth would make everybody rich quickly and so on. So, and you know what's funny? Well, not funny, but they're just history tends to repeat itself, because even now it's not necessarily .com you're seeing, but
Wait,
you're
there's a
seeing
saying, like they say history doesn't repeat itself, but it does rhyme. That's basically what you're
exactly
saying.
precisely what I'm saying. Because
Uh,
instead of .com nowadays you're seeing .ai.
yeah. Anguilla
Not
gets money from that though.
Anguilla.
Anguilla
How
because
so?
they have the .ai like domain. I think it's domain name. It's called. So they get
Oh, really?
revenues or money from that. Yeah, the country Anguilla in the Caribbean, they get money
That's
from. I
crazy.
think I was reading like an article about it and how much earnings,
Wow.
like they actually got like millions. I think it's like millions of US. Like it was a point where it was. I don't think it was beating tourism, but it was doing well for them.
Mm-hmm.
It was doing well for them. I'm seeing an article. This is just 31st of August. It said how much money have they made from this?
I don't know. Anguilla is such an interesting
This
country,
said
because I know they closed down like half the year. Like tourism, everything shuts down. It's a very
they
interesting country.
wow, this is saying this article is right from BBC titled
Mm-hmm.
How Sherlock Made This Tiny Caribbean Island Millions from Its Web Address. It says that the Anguillan government says that in 2024
Mm-hmm.
it earned 39 million US from selling domain names. That was almost a
Wow.
quarter of its total revenues last year. So
Wow.
a fourth of the money that the
Mm-hmm.
overall company made. Wow. Tourism accounts for some 37%. So tourism there could be a point
Wow.
where this is even more than tourism.
Mm-hmm. That's so true.
Yeah. Wow.
Yeah.
Mm-hmm.
Yeah. So, I mean, that's kind of what happened. And then, I don't think I spoke about it, but, by I think 2000, early 2000s,
Mm-hmm.
the bubble peaked, reality set in, and
Mm-hmm.
then the bubble popped.
Mm-hmm.
And so many dot coms, they actually
Mm-hmm.
burned through cash without like viable business models.
Mm-hmm.
I remember at the time the Nasdaq, which is the one of the stock exchanges in America, it actually plunged over 70% from its peak, which is
Mm-hmm.
crazy, wiping out trillions of dollars. So, hundreds of startups went bankrupt. Big companies like Cisco. I think Cisco does
Mm-hmm.
like
Yeah, there was
access
something with
points
like they
and
were ridiculously they were one of the most I think they were the most valuable company in the world at one point.
yeah,
But then when you
yeah,
looked
and
at
its
it, it didn't
growth would
even.
have it never made sense, because I think the growth of Cisco at the time could have I think it could have gotten as close to, like, on its trajectory in the next, I think they were doing it for the next 10 to 20 years, it would have rivaled the whole of the US economies,
Mm-hmm.
like GDP. And I'm just like, wow, that's
Mm-hmm.
crazy that it was growing that quickly. So, and then
Mm-hmm.
Cisco fell by like 80%. So,
Mm-hmm.
yeah.
Mm-hmm.
Yep.
Yeah. Yep. Mm-hmm.
Yeah, so that's one of the bubble examples.
Mm-hmm.
The dot com bubble, I think, is it for me. It's
Mm-hmm.
relevant because I see a lot of AI things now, and it
Mm-hmm.
just seems like the dot com
Mm-hmm.
bubble.
Mm-hmm.
I don't know if
There's a,
if you
the
feel the same way.
similarities. Yeah, in some ways, I could see that. People look at it and they're like, "Hey, there are the internet did make like looking like when you were back then. If you heard about the internet, you saw some of the possibilities. You'd be like, "Hey, this is actually really cool. There's a lot of things that you could do. You could set up websites. People could buy things on them instead of having to go to somewhere. You could buy it and then have it like, even if you're not saying shipping, but just buy it and then go and collect it or something. That was something that was new. Instead of having to necessarily call and speak to someone, you could automate stuff like that. So there were some pros to it. Just like with artificial intelligence, there are some pros to it. There are some uses. It's being shown to like help in like medical research and so I think it does fit that core of, hey, there is actually something there. There are
Yeah, and it
you
could
know
change the
there are a
world.
lot of benefits. It could change the world, and it is something that a lot of companies and countries are pushing very hard. So
Yeah,
there is that potential there, and there is, I think, a growing change or like growth of a positive sentiment or feeling towards AI. You know, I think more and more people
yeah,
are starting to see a lot of headlines about artificial intelligence, what it is. It's if you look at even the like in the app stores, application stores on people's phones, Google Play Store, Apple Store, the or the App Store, those AI models and whatever, they are ranking highly. So it's like people are actually using them. They're using it on their phone, or they have, I think ChatGPT almost has it's approaching like 1 billion users. I think it was like
It's quite a few.
700 or
I don't know how
800
many
million or
users.
something like that. It's approaching like 1 billion
Mm-hmm.
users. There's what, 7 billion people in the world.
Yeah.
So, there is, I think, adoption. It's just, even if there is
Are
that
these
thing there,
businesses? Mm-hmm.
I say, even if there is the true, there is value there. It's like, hey, if it just reaches a point where, like, any business, even if it's a good business or good thing,
Mm-hmm.
the price is really important. The price at which you get it at. So
Yeah.
you could have a car that is worth $1 million, and someone says, "Yo, would you buy it for 2 million?" And you're like, "No, that don't make sense. Why would I buy it at 2 million? I'm looking at all of them are selling at 1 million. Why would I do that?" And then someone says, "Oh, the car is, say the car is worth half, like 500,000, another car, and they're willing to sell it at 200,000, you'd be like, whoa. I mean, yes, you'd want to check, hey, is there a reason why? But say you checked it, it was actually verified, okay, the
Mm-hmm.
car is actually in a good state. It's like, hey, yeah, the car isn't nice, but you're getting this thing at like such a cheap price. And if you thought you could sell it fast, you could make a quick profit on it. So it's
Mm-hmm.
like, you can have something that's good, and the price you get it at is just too high. It's like too high a price.
For
So
real.
if the business,
Yeah, I think even so with the AI companies, like you'll see a lot of them pop up and they have
mm-hmm,
ambitious plans, and they will probably revolutionize technology and all of these things. But
mm-hmm,
at the end of the day, a lot of these startups, they're at the core of it is it's a business, as you say,
mm-hmm,
and the business is there to make profits because you have to be able to pay people, you have to be able to pay the workers, pay
mm-hmm,
the software for the software and the hardware and all of those things. So if at the end of the day you're
mm-hmm,
not making money, it's not a sustainable business. How
mm-hmm,
long will you be here for? And I think
mm-hmm,
the thing with the AI or the speculation of an AI bubble
mm-hmm,
is, yes, a lot of people, how many of these companies are even profitable? Like, I think
mm-hmm,
that's the biggest thing. You'll see
mm-hmm,
abnormal, pretty high valuations of certain
mm-hmm,
companies. I think, is it ChatGPT worth 300 billion or something like that?
mm-hmm,
you know, there are a lot of companies out now, even like Perplexity, etc., that are pretty large companies,
mm-hmm,
but are they really that profitable? Are they trading much higher than their intrinsic or fundamental value? Uh, is this a bubble? Will it possibly pop? What are the
mm-hmm,
repercussions? Um, because for us, I'm not sure of all the, you know, how much Jamaica's direct exposure was to the dot-com bubble at the time, right?
mm-hmm,
I don't know how badly we got burned in Jamaica. I will say there's another bubble which I also think affected Jamaica, but it was mainly in the US, which was the housing bubble, the housing crisis of 2008, I think, or 2007, 2008, around there.
mm-hmm,
So, the American dream, part of the American dream that they sell is home ownership.
mm-hmm,
And at that time, that turned into, a whole speculative fever. So that there is like easy credit, meaning it's easy for you to get like a loan at the time. So interest rates,
mm-hmm,
I think, were low. It's easy for you to get a loan to build a house or to buy a house,
mm-hmm,
right? And so that's a mortgage. And so also there are a lot of factors. You remember we were talking about bubbles and how they form, and it's
mm-hmm,
multifactorial. Like many factors cause bubbles.
mm-hmm,
So one, yes, it was easy to get a loan at that time. Two, mortgage brokers, those people that
mm-hmm,
you know they're incentivized. They're actually incentivized to
mm-hmm,
sell you mortgages at the time. They actually had
mm-hmm. For home loans.
short-sighted, yeah, incentives. And so imagine now you get paid based on every mortgage or any loan that you lend out, right? That can be pretty negative because if you're incentivized by just sheer quantity of loans and not the quality of loans, that is literally setting the stage up for, yeah.
You'd have skin in the
So
game too.
precisely.
It's,
And so, you wouldn't necessarily care if borrowers could pay back long term. You're just trying to make money selling these houses or selling these loans to people that want houses. So, home buyers at the time only believe housing only goes up. So prices started surging from the 2000s, going straight up. Got even worse early, I think so it was like 2004 to 2006, it started to like skyrocket, right? And at that time, I think within a decade, the housing prices doubled in under a decade, actually. And so there are certain they did there's certain indices and that did like a lot of data and research on the price of houses and so on, and it reflected this whole national boom. So all in America, people are buying houses, people are flipping houses, meaning buying and selling in like a short space of time. And because housing prices are just going up. Imagine you buy a house for 100K US and sell it for 140K US same year in like 6 months. That's 40 grand US profit in 6 months. That's and some people are doing this a lot.
Return, yeah.
That's a 40% return in 6 months. Right? Not many things give you that at all. So you had flippers buying condos pre-construction just to resell it in months. And I don't know if you've watched
The Big Short.
Yeah.
Or Margin Call. Yeah, they talk about those kind of stuff.
Yeah, man. They talk about subprime loans. That's what they call it. Subprime loans just mean, you're
like lower quality. There was a higher risk that the person wouldn't pay back.
Exactly. It's a higher risk the person wouldn't pay back long term. So that's subprime loans. And so that level started to skyrocket at the time. And so millions took out these subprime loans and adjustable rate mortgages, all those kind of stuff. Those complex financial tool or solutions, which really and truly are just all different types of loans, but they were risky. And they're risky for the banks because, if you're lending out this much money and people they can't pay you back. At the time, housing, the bubble popped in, I think, 07, 08. And, I've been doing a lot of, research into interest rates and inflation and the correlation between interest rates and inflation. It's like a seesaw. Now, how that happened was interest rates started to tick up. And interest rates are, let's say Preston wants to buy a house. The bank is going to lend him at a certain percent. So let's say it's 10%. So he wants to buy a house that costs, I don't know, 50 million Jamaican. So the mortgage he would end up having to pay back. Let's say it's just he's borrowing 50 million. He has to end up, and the interest rate is 10%. He has to pay back 55 million. So the 5 million is that interest. And so interest rates ticked up. So imagine now it gets more and more expensive for you to take out a mortgage because interest rates are going high. And then home supply started to grow too because there are more houses being built. So that's demand dropping because interest rates are going up because it's harder to get a loan, or it's more expensive to get a loan. Supply increase, right? Prices stalled and just fell. That's just how the market kind of works. And once prices stopped rising, the flippers vanished, default spiked, right? So people just say, "Yo, can't pay you back, bro." And imagine going to NCB, and NCB is just like, "Yo, where's the mortgage?" And you're like, "Well, I'm gonna have it this month. Check me back next month." But imagine that now on a huge scale. That's millions of people, and that triggered the global financial crisis. So yeah, that was just a short synopsis on the the financial crisis at the time.
Mm-hmm.
It had a real impact on Jamaica, for
Yeah.
sure. You know the saying, when the US sneeze, Jamaica catch a cold?
Mm-hmm.
Yeah, the same thing happened even with the housing crash. You know, because you can think of it in many different ways. I can't even imagine remittances. Imagine now all these people used to send back money to Jamaica,
Mm-hmm.
and that was a huge source of income for a lot of Jamaican families. But
Mm-hmm.
when you check the data in '09, remittances fell by 11%. That's a drop of
Mm-hmm.
like 225 million US dollars.
Mm-hmm.
Because
Oh.
people in the US and the UK, they struggled.
Mm-hmm.
And then imagine tourism slowing down too,
Mm-hmm.
because not many
They have
people
less
are
money to spend.
less less disposable
Could they?
income.
Yeah.
Hmm. And
Mm-hmm.
foreign direct investment too. So these are companies in the US countries, or
Mm-hmm.
first world countries that would invest here.
Mm-hmm.
All of that money would have dried up because
Mm-hmm.
investors are now a bit more cautious, because
Mm-hmm.
if this can
Could have been.
happen here
Mm-hmm. Or it's just like,
in the
even like, say you're gonna set up a hotel because a
hmm
lot of people are coming into the country, but then a lot of people, like, less people start coming into the country, you'll be like, maybe I shouldn't set up the hotel. Maybe I should actually set it up this other place.
hmm
So it's just there, that the issue of capital. But I think it's one of the things that you touched on, that I think it was Morgan, how was it, Housel or Housel? I don't want to.
Housel.
Housel, okay. I remember he spoke about the whole thing with the bubble, is that you have a lot more investors who, as you said, they aren't thinking 10 years down the line, 5 years down the line.
hmm
They are, it's like they maybe don't really understand the risk of investing in the business at this price. And based on, it's gone up 1,000% in the last, 5 years. And maybe the actual profit or, earnings of the business, it may not actually pan out. So it's like, if you're
hmm
buying it, once again, it's like if you thought, say you're buying a car that now you think, so now it's like $1 million, but you say, hey, I think in a few years it's actually going to even be worth more. But I guess a car is probably a bad example. The cars don't usually,
appreciate like that.
yeah. So I don't know if maybe a car is an example, but you're buying the business because you're like, hey, when they add the .com, I expect that they're gonna earn a lot more money, and then that's gonna allow them to pay more dividends and maybe buy back more shares and expand more and that stuff. And so you're willing to buy it at whatever price you're seeing it trading at. But then, what if all of that doesn't happen? What if the profit goes down and they continue to do poorly, and it's already gone up 1,000%? There are a lot of people who are in it, and maybe they just sell because they're like, hey, I can't bother, and
hmm
you could just have a rapid drop in the price. So it's like, oh yeah, one of the things you were stressing was that you have a lot more people with that shorter term mindset, you were saying. So he didn't specify a time period, but maybe they're just thinking a week, a month, a day,
Yeah.
and they're just like, okay, I don't care if it's 20. It's okay. It's $20 now. I think I can sell for 22 tomorrow. That's good for me.
hmm
And then it could just go higher and higher and higher and higher. And there's almost like this positive
It's a
feedback loop.
momentum thing.
Yeah, there's like a positive feedback loop where some people buy it, it goes up. If a lot of people start buying it, more than people who are selling it, the price go up. So people hear about the price going up, and then people report, oh, it was the best performing company. It's going to
Yeah.
revolutionize the world. You see stuff online that then encourages other people to buy it. And they may not have like, finance background, and they say, oh, I shouldn't buy above a price to earnings of this or those kind of things. I just say, hey, the stock is there. I want to buy it. I just buy it. I just buy it. And then that
Real.
causes the price to go up more. And then more people buy it. And it's like cascades, and it just goes and goes and goes and goes
I
until once
think a
again
good
something changes. And then bam,
yeah.
pops. The bubble
Uh,
pops.
Bubble pops. And I think a good excerpt from the book is, he says momentum attracts short-term investors, short-term traders in a reasonable way. So bubbles form when the momentum of short-term returns attracts enough money that
Mm-hmm.
the makeup of investors shifts from mostly long-term to mostly short term. And you're right about that positive feedback, because that process feeds in on itself. So as traders push up the short term returns, they attract more traders, and before long, you know, and it doesn't take long. The dominant market price setters, with most authority, are those with shorter time horizons. So bubbles aren't really about valuations rising or so on. That's just a symptom of something else. That's it's time horizon shrinking more as more short-term traders enter the playing field. So yeah, fam. I think also, I looked at the JSE's report back in 2008 when the housing crash
The JC as
happened.
in Jamaica Stock Exchange.
Yeah, I looked at some of the main market data, and the index actually fell by 25% in 2008, around 25%.
You're saying the overall
That's
market dropped, like the
the
price of all of the
overall
different
market.
businesses. Yeah.
So if you average the price of all the companies on the stock exchange in 2008, it actually fell by 25%. And that's a crazy drop for the market. So yeah, I mean, and I think we entered into a recession the year after that, and it was tough. So it definitely affected us in Jamaica.
Yeah.
Yeah.
I'm surprised you didn't talk about like the tulip bubble.
The tulip?
Yeah.
Tulip bubble?
Yeah.
What tulip bubble?
Like was it on the Amsterdam Stock Exchange? I think this was probably one of the first bubbles. I think it was like in is that the 1600s or 1700s? And
You're surprised I didn't talk about something from the 1600s?
yeah.
Hilarious. But yeah,
And
talk to me.
basically my understanding is tulips, they're like a flower, very pretty. And I think it was coming from like another country to Amsterdam, which is the Netherlands. Yeah. And it was very rare. So it's almost like, oh, this hot new beautiful flower, you've never heard of it. It was very rare. And so a lot of people didn't have it. People thought it was pretty. So a lot of people, it was pretty, so a lot of people wanted it. And then it took a long time, and it was, I'm guessing transporting a flower, if it was actually a long distance, especially back then, would have been hard to then have it come here and actually be good. So there was a low supply, high demand. So the price of the price of the tulip basically rose very, very high. And over time, there was even a point where apparently there was this virus that infected tulips. I don't remember the name of it, tulip something virus. And it then caused the tulips to kind of like lose its color in a way, but only like partially, and it added like these swirls to it. So it basically made it, some people actually liked it. They were like, whoa, that looks like it's even rarer. So it was rare to just have a tulip before, but now it's rare because it's like a rare variant of the tulip. And so people really started liking them, and it traded at prices that it was almost like, imagine they're saying the price of a tulip now would be like a big finance person's salary, where it's like, oh, this person is in finance, he's earning like a good salary. And it's like that.
Oh, that's crazy.
A single tulip, where it's not like, oh, you could take a chemical from it and then use that chemical to treat pain, or there wasn't all those traditional valuation stuff that you could do, like, oh, it could actually make you money because you could break it down, and it was just, okay, whatever someone else thinks it's worth. And so it was trading at those prices that were ridiculous, that they were saying, hey. And then I don't know exactly what caused the bubble to pop, but eventually the bubble popped, and a lot of people got burnt and lost a lot of money. It was a lot of that same thing where, oh, there's something interesting about it. Yeah, it was a pretty flower. And then people started getting into it, and then prices started going up, and people were just like, yo, I don't even need to work. I can just sell tulips. And yeah.
You can just sell tulips. That's hilarious.
Yeah. People quit their jobs. They sold their homes.
Jeez.
Yeah. Yeah.
Okay. I mean, I didn't know about that, but that sounds pretty cool.
Another one people talk about would be, I remember someone actually asked me once if I thought the JSC, the Jamaica Stock Exchange, was in a bubble as it relates to like IPOs or initial public offerings. Yeah, like someone asked me like, oh, is it in a bubble? I didn't even know what a bubble was. I think I had to probably look it up and be like, wait, why do you say it's in a bubble? Do you think we were in a bubble?
I actually have a hot take on that,
Mm-hmm.
and I don't know if we'll get any flack for it or not, but
Mm-hmm.
yeah, I definitely think we were in a bubble at that time. I think, you know, so at that time, right? This was
Mm-hmm.
like it was a run of years, and this was
Mm-hmm.
before we started. But I just caught on to that run, that bull
Mm-hmm.
run.
Mm-hmm.
People call it the bull run, but I could see it as a bubble.
Mm-hmm.
And it was 2016 to maybe like 2020,
Mm-hmm.
and we had a stable economy. Economy was decent.
Mm-hmm.
You
You're
know,
paying down the debts.
we're paying down the debt, or at least the debt wasn't getting worse.
Mm-hmm.
There were low interest rates too. I
So it
remember
was
interest
cheap.
rates were very, very low. Yeah.
Mm-hmm. It was much easier to
Um,
buy stuff
much easier to get access to capital and
or
buy
money.
stuff.
Mm-hmm.
Yeah, access to credit, to borrow, to buy whatever. And the you remember the Jamaican main market, the JSE, sorry, was actually hailed as the world's best performing stock market, 2015 and 2018. So it's also within that time period too. And so people are hungry for returns,
Mm-hmm.
and a lot of money was piled into equities, especially IPOs.
Mm-hmm.
And I remember 2019 specifically, IPOs
Mm-hmm.
were almost like it almost became like a pop culture phenomenon. It was almost like,
Mm-hmm.
yo, oh, this company at IPO, may I buy it? People are just like, any IPO is
Mm-hmm.
just seen as a good investment. We just like a buy it,
Mm-hmm.
right? And you know, certain things helped because the JSE, the junior market, has its tax incentives. So there are a lot of different factors that cause the demand to go up for stocks. All
Mm-hmm.
right. And I don't know if you remember, but there's certain stocks that when they would list at like $1 and they would just fly. They would absolutely fly.
Mm-hmm.
Uh, you can remember any?
I
Any
didn't
of
really.
them you invested in?
I
No,
didn't invest.
2019.
Yeah, I didn't. It wasn't in 2019. I more started 2020.
Oh, I
I think I
remember
had.
Lab.
Uh-huh.
Lab was one that came out at $1. The Limnas and Bards, film company and so on.
Mm-hmm.
Uh, and I remember buying at $1, and it went to $2, and it went to $3. I'm pretty sure I sold at $4 or $3.99,
Mm.
and I was just like,
Hold on.
"This
So you
is
bought. Hold on. You
insane."
bought it at $1. He sold it
Mm-hmm.
where? At
$3.99.
$4.
Yeah, call it $4.
Oh wow! So you
Yeah,
4x quadrupled your money,
quadrupled,
or 300. You made 300% on your money.
and that was. I remember at the time. I think I was like 20 grand.
We probably never got.
Yes.
Well. Oh, okay.
Yeah, it was 20 grand I got in. So
Mm-hmm.
I remember applying for a lot more than that. I only got in 20 grand at the time.
It's a lot more, big man.
Yeah, I mean, I borrowed money to do that because I was a student. I never had funds.
Mm.
But yeah, I borrowed money to do that. Now that I think about it, when that was like maybe my third, fourth stock that I owned. I don't remember. It was definitely the first five
Mm-hmm.
stocks I've ever bought. That was definitely one of them.
Mm-hmm.
And there's a time during that summer where any stock, if you close your eye and just throw money at a stock, you could have made money because everything was going up at that time. Time was nice, bro. The market was nice,
Mm-hmm.
right?
You meant that like
An IPO
what makes the
season.
market nice?
Yeah. Wait, what? Pardon me?
Like think about that. You said the market nice. Like what does that
The
mean?
market nice.
What does that
You
mean to
know,
you? No, like I
stocks are
think now
flying.
I start to think of that differently. Like I just
Definitely.
because like when someone says the market nice, right?
Mm-hmm.
And it's like if everybody is saying the market nice, how do you view that now? Like with your knowledge and experience now, I guess I just view it differently now.
I do view it. I do view it differently because that could mean different things to different people. For
Mm-hmm.
me, I just said it in a context where I thought everyone thought the market was nice because you
Mm-hmm.
could just make money on the market.
Mm-hmm.
But right now, even though majority of the stocks are not flying,
Mm-hmm.
you still have opportunity to make money on the market. So in my opinion, the
Mm-hmm.
market's still nice.
Mm-hmm.
It's just, some people
Mm-hmm.
just say it was nicer back then and so on,
Mm-hmm.
but
Mm-hmm.
yeah, that's
But that's the
that's
thing.
just
Is
me.
nice. It's nice even always really what is needed, because I
Hey,
guess how I
the
view
bubble
it
popped.
now. I guess so.
The
I was
bubble
saying like how
popped.
I view it now is that in terms of like that saying, oh, the market nice, where it's like, okay,
Mm-hmm.
as you said, the overall market goes up a lot. Almost every stock, you said things like, yo, if you don't even have to, you basically what you said, like where you don't even have to, you can lock your eye and buy. So
Yeah.
almost every single stock on the exchange, you're saying like, or a vast majority of them went up. So it's like basically someone who
Mm-hmm.
comes and they don't know how to invest, they don't know how to value a company, judge, hedge their, think about their risk or those kind of stuff. They're just learning. It's like if you just start, you buy, the price go up, and you buy it at $1, it goes to $2. You go off with
Mm-hmm.
100%. You say, "Yo, I'm the best at this investing thing, man. Like, yo, this investing thing." Like, they tell everyone, they say, "Hey, you should invest, man, because I just started. Like, I read it and I read the document, and you know." And I guess I just view that differently because I'm just like, wait, if there's a point where everybody, that's almost to me is a sign that hey, either I should start selling or I need to like try to be maybe less aggressive,
Edge.
because I'd be like, hey,
Mm-hmm.
if that point where it's because usually what that means to me is that the price is like much same thing where we say, oh, whatever way I assign the value. So I say, yo, is that the company's worth $1 million? It's trading at
Yeah.
2 million. If I'm in the stock, I would probably sell it if I really thought that hey, it was trading much higher than its true worth. So if I didn't own the stock already, I probably wouldn't buy it. But if I own the stock and it's selling at a price where I'm like, yo, this doesn't even make sense, I'll just sell.
Mm-hmm.
So it's like, I guess I'm
Yeah.
thinking that where I'm like, hey, if it's at that point where everybody's saying that, I feel like, hey, these companies, like, it's, yeah, just, I guess I think this, the whole psychology of the market and trying to quote unquote time the market. That's just
Mm-hmm.
something that I would look for. If I started seeing stuff where, like, I feel like right now there's a lot of, well, this is just my view, but I guess I'm not really looking at the general market view, or I haven't really checked in on it. But up to the last time where I looked at it, it was like the overall sentiment was kind of, hey, it's not so hot. They're like, hey, some of the IPOs, I bought it and it hasn't gone up, it's down. So yeah, I don't know, that was my little rant about that.
No, I think you're 100% right, because the way even we look on investments, right? Like we find when no one's talking about a stock very
Mm-hmm.
attractive. But
Mm-hmm.
why? Because at least you see an opportunity for an upside when
Or
people
no one's
are.
talking about it positively.
No one's
But
talking about it
people, yeah,
positively.
people are
Yeah,
like, hey, but what
precisely.
if this happens? Or but what if that
Or no
happens?
one's just
Yeah,
talking about it.
yeah, true,
Whether
true.
it's not positive or not, people just
Mhm.
forget that the stock even exists.
I guess
And then
I
all of a
like it
sudden,
when they say where they're actually giving negative sentiments,
yeah.
because if I can understand why they view it that way, then if I
Mm-hmm.
say, hey, what could change that view? And then what if that thing that could change that view, what is the chance of that happening? So, and then if their view were to change, how would that then, or how would that affect the stock price? So is it
Yeah.
someone that, hey, this guy tells me, yo, I don't like that they're expanding into, I don't know, Guyana. Everybody loves Guyana now.
Venezuela. Let's use Venezuela.
Does
Because,
everybody love Venezuela now? I
hey,
don't know. I'm gonna use
I
Guyana.
know one
So
country
say
that loves
everybody's like,
Venezuela.
I'm not okay, Guyana, right?
Mm-hmm.
Everybody's like, hey, I don't like that they're expanding into Guyana. I'm worried about this. I'm worried about this, right? So that person says that about this company. Say I don't own shares in it. I'm like, hey, if that's their issue with it, because they might think, oh, that Guyana wouldn't do well for them. But what if when I looked at it, I was like, wait, it could do bad for them, but it could actually do well for them. And I'm like, okay, let me do some research. I'm like, wait, there's actually a high chance that this could do well. That person who just said that before, that hey, he didn't like that they were expanding there, What if when they start to make money from it and he starts to say, hey, they're growing and then they're going to start even earning more money than they're making here, he then wants to buy it from me. So I'll just buy now and then sell to him when it's time.
Yeah.
And he just, sells it, buys it from me at 50%, twice the price. I that's his, if you want to do that, man, that's you.
Facts.
Can't control people,
Yeah. I don't know, man. I forgot where I was going with the point because.
Oh, sorry.
No, that's fine. That's fine. I did have a point though, but trust me, I think that at the end of the day, for the and as I said, it's a controversial take with the JSE having the whole IPO bubble and the IPO wave. I was kind of remembering some of the stocks too. Like I remember Select when the Select funds came out, both MD and Select F. Right.
Basically, Sagicor set up stock portfolios. And then one stock portfolio owned like financial companies, so like NCB, Scotia, JMMB. And then one stock portfolio owns like manufacturing and distribution companies, so like Awisinco, Grace Kennedy, Separate, Carreras. So you're saying what they did was they said, hey, this basket of stocks, so this could own 1,000 shares of this, 10,000 shares of this, 10,000 shares of this. You can actually buy that company. So the company that will own the stocks, you can just buy that company and it will own the stocks for you. And so if the stocks then went up, say buying the company, it's worth $1 billion. If the stocks then went up, and the stocks that the company owns goes up in value, say all of the stocks double, then it was worth $1 billion, it's now worth $2 billion. So if maybe someone would want to buy it from you at a higher price than the $1 billion you bought it for. So you're saying that, yeah, they did that.
Yeah, so they did that. And I remember the price at the time was $1 per share, right? But when you check what they call the NAV, the net asset value, which is basically the value of the entire portfolio that person was talking about, right? And then you divide that by the amount of shares. So it's basically what is one share worth? Like what's the intrinsic or fundamental value that we keep talking about? And let's say at that time, it's basically $1.20, $1.20, right? But the stock price kept climbing. $1.30, $1.40, $1.60, $1.80. It's approaching and hit $2, and you're just like, if the actual stock portfolio is worth $1.20, but this stock is trading at $2, right? Does this make sense? And so I remember at the time I owned Select F. I didn't buy Select MD. Select F was the first one that listed. And I remember
that would
selling
own the NCB, Sagicor, Scotia, all that stuff. Yeah.
The financial stocks. And I bought it at the time we got a discount with Sagicor. It was 98 cents. And I remember selling it at $1.67. I'll never forget that. Okay. Yeah. And I also borrowed money for that too. I definitely borrowed money. Big up my dad for that. I did yeah, man. That was one of my, the market nice. The same sentiment at the time. The market was nice. And so I think it can be dangerous, as you said, because people don't know they're in a bubble. People don't know what's going on. They're buying and believing and just hoping and praying. But I think at the same time, it has produced investors like me who are now addicted to the stock market and love the stock market and see the opportunities that the stock market can have for just any and anybody investing. Right? So, yes, bubbles are never really, there's opportunity to make money in bubbles. I will always say that. You just have to, I don't know what you have to do. There's a lot you have to do. I would just say the main thing for me is you have to have a margin of safety. Right? You have to be like, okay, could I lose this? I'm not putting all my portfolio into this one stock that I think is flying and so on. You still have to reassess. you still should always have a margin of safety. That's something we speak about a lot on the podcast recently. I don't remember, where did we get that from? Where did you get the margin of safety thing from? I
I
remember
think it's
reading it in a book.
popularized by like Buffett. I don't know if
Maybe.
he
Yeah,
was
it's
like
probably
the
Buffett.
original person, but yeah. Maybe it was
Yeah.
Benjamin Graham.
Mm,
Mm-hmm.
that's true. That's true.
Mm-hmm.
But yeah, that's one of the key takeaways, because there are few things that matter more with money
Mm-hmm.
than understanding your own horizon
Mm-hmm.
and trying not to be persuaded by the actions and behaviors of people playing different games than you're playing.
Mm-hmm.
Because I'm investing, some people might be gambling at two different things.
Mm-hmm.
So yeah.
Mm-hmm.
Yeah. Anything else you want to leave with the people for bubbles? Guys, if you love this video, right, if you know of any bubble-esque scenario, drop it
Mm-hmm.
in the comments below. And
Are we
have you
in a
been,
bubble?
are we in a bubble? Or have you ever been in a bubble? What was that like?
Mm-hmm.
Let us know in the comments down below.
Mm-hmm.
But yeah, please like this video, guys. Subscribe if you are new, as I said, and share it. Tell a friend. Thank you so much for being on the Limitless podcast. And yeah, like always, guys, stay limitless.
Peace.